Let's talk about the latest central bank's move as regards the sacking of a particular agency or body. Now, the Central Bank of Nigeria's recent decision to actually terminate the appointment of all the executive directors at the Nigeria Incentive-Based Risk-Sharing System for Agricultural Lending has actually raised questions about the future of agricultural financing in Nigeria. This decision, approved by the CBN Governor Olayemi Cardoso, represents the latest in a series of staff reductions at the Apex Bank since its appointment last year. NIRSAL, a non-bank financial institution wholly owned by the CBN, was established to redefine and manage agribusiness-related credit risks in Nigeria. And now, to help us understand this better and the implication of this sack, I'm being joined by Adetiloye Ayola, who is the CEO, Produce Export Development Alliance. Thank you so much for joining us.
Thank you very much. Thank you so much. Glad to be
Of course. Here. It's nice to have you around. And we're hoping to have Mukhtar Mohammed, who is the CEO of Asha Investments Limited, also join us to broaden this discussion. But then let me just ask Adetiloye, from this particular recent move of the CBN, how do you see it? Are there any positives that you would take away from it, looking at the fact that this is a body that sees to providing some sort of finance for the sector?
Thank you very much. Thank you for having me once again. Let's first go back to why NASAL exists. NASAL exists to de-risk agricultural lending. It was established to facilitate proper investment into the sector to further enhance and de-risk, the agricultural lending sector. Now, and I think that there's been a number of issues in the news that we've been reading about and following very closely about the way that NASAL has been governed and has been organized and the way that it's operated. I think several years back, we could see that NASAL at some point in time had lent out several of this money under the COVID scheme and have not been able to largely recover some of those funds. And so it's this particular move tends to spark a whole number of debates about, what the core mandate of NASAL is actually about. Depending on how it is handled, this particular action can lead to either investors' flight from the sector, because this is an organization supposed to facilitate and de-risk agricultural lending, and to see that to sense that it is not properly governed can be a a big blow to agricultural financing in itself. It can really put the whole sector at risk, and it's just really very bad for the whole system, the sector as a whole.
Okay, but then while not trying to make excuse for NIRSAL, you talked about the fact that they were not able to recover the funds that were provided for players in that sector during the COVID-19 pandemic. And we also have seen the trajectory of the Nigerian economy since, let's say, 2019, 2020, up until this time. It's been a bit of a struggle, coupled with the fact that the Nigerian government, the current administration, rolled out several policies that, in a way, has debilitated the operations and the performance of these businesses. So in the process of having to recover these funds, these businesses or the players within that sector not being able to provide those funds to NIRSAL, don't you think that in a way could have been the major reason why the recovery of these loans was not effected? Not on the part, now looking at the blame now, not on the part of NIRSAL, but these businesses that have not been able to provide those funds. That's what I'm even looking at.
Well, I mean, you have a point there, and I completely agree. We can see the current trend of the Nigerian economy, especially even when it pertains to the agricultural subsector of the economy. Agriculture in Nigeria is really doing badly at this period, and you would find out that several of these businesses were either financed to either aggregate, store, or manufacture. And then you find out that they are not able to successfully carry out this business activity. It would dramatically affect their ability to repay these loans. And I think this is one of the core fundamental issues going on with NASAL at the moment, in the sense that the businesses that are, it's not that, well, of course, there might be some people not willing to pay, but most businesses are not able to pay. The entire thing has largely been ground to a halt, and NASAL is unable to recover its funds. So it's obvious. Now it goes further to now say that for an organization that is supposed to de-risk agricultural lending, now falling into risky agricultural lending that it cannot recover its loan, it really tells a lot about what is not just going on in the in the organization itself, but on the larger ecosystem, especially when it comes to agribusinesses in general. It's really quite sad, and this has been a trend that has been going on and on for a while now.
Okay, so at this point, let me bring Mukhtar Mohammed into the discussion. He's the CEO of Ashara Investments Limited, and of course, will be sharing his perspective with us. Mukhtar, thank you so much for joining us.
Thank you for having me, Lekon.
So I believe you've heard what Adetuluyi said for a couple of minutes now, and I'm wondering, this sack of the executive directives of NASAL by the CBN, is it based on performance issues? Are there valid reasons for the sack, looking at it from your end?
Well, first of all, what was the reason behind his setting up? Was that achieved? It was not. Like he said, most of the loans also for agricultural purposes, you and I know, did not get to the farmers. It was hijacked by the political class. Recovering of those loans also being like a snail movement. There's not been any so much recovery. And you mustn't forget that you do also look at that was as a means of intervention in the agricultural sector. And the goal of the current CBN governor is he doesn't want to do the non-monetary policy intervention any longer. So when you look at that, it's the sacking of the board. I think it was something that they should have seen coming, because they have also not clothed themselves in glory with a lot of things that have happened in that space. All you need to look at what had really happened in that space is to look at the current trial of the former CBN governor.
So then, what do you think will now happen to the body, as it were, in terms of its mandate, its strategic operations, and its objectives for the sector? Because it seems as though there could be a halt when it comes to the provision of funds for those that might be needing it for that particular sector.
Well, there has to be an halt, definitely. But again, you have to ask yourself, what is it in the place of CBN to really do those functions? And would the NASRA, do they really have the manpower or the staff or to run that type of business? I don't think so. So I think with the sacking, it could come to an end, and the CBN will begin to look at how you can drag it into the conventional banking space, or maybe rejig the board. But again, like I said, rejecting the board is like more or less going back to what you say. You don't want to be involved in non-banking issues, non-monetary policy issues. So for me, I don't think there will be any reason to have it, or recovery of those money. You have to ask yourself, have they also been able to recover it? Maybe the CBN might come up with a board with the singular purpose of trying to recover some of those funds from whoever have taken it, and then maybe again end that aspect of it. Like I said, it was an interventions board that was supposed to not last become part of the CBN as it is, but just because to intervene in a critical sector because of the advent of COVID-19. And again, it didn't really go on well.
Adetuluyi, so what's your take on these two when you look at the terms of financing and objectives of this particular sector? We're talking about the agri sector now, and what has happened to NASAL. Do you think this could be purposeful for the sector, looking at the fact that we have certain elements or certain people being removed from the particular body that is meant to provide some sort of financial interventions to it?
I mean, just like Mukhtar has just said, I think it is very correct in the sense that majority of this finance was actually not provided to the people that it was supposed to be provided for in the first place, right? And so you can see a lot of mismanagement of funds from most of these people that obtained the loans. Now that said, I strongly believe that this particular move can serve with redirecting NASAL. I, on the other hand, really think that NASAL's missions and mandates are really very important, especially for the agricultural sector. There is a need to de-risk that sector in a massive way. And I think that the firing of this board, the sacking of the board, would actually, allow the organization to realign itself with its core objectives to be able to provide that de-risking that sector, as it were. Even though it's true that, the CBN is going in another different direction, and I strongly think that this is a positive move, and there's a way to be able to find a way around it to make NASAL at least deliver on the core objectives that it needs.
Okay, so Mukhtar, we know how instrumental, valuable, I must say, that investments are when it comes to fueling or rejigging or even transforming sectors, critical sectors like this. We've seen what has happened with the NNPC, despite the fact that the Nigerian government is trying to get investments into it. Now, we are also seeing some sort of shoddiness and imbalance in the agri sector with this particular body that should be, in a way, fueling its activities. Now, when this continues to happen, what do you think would be at the mind of investors or maybe critical lenders to it?
Number one, Blakon, you should know that it's never in the business of government to be in business globally. So we need to understand that. So it has been proven over and over, whenever government is in any business globally, even in a well structural economy, it never ends well. So definitely that's lessons for us. The only agricultural scheme that we've run in this country that seems to have a little bit of success was the one run by the current governor of African Development, Akinwumi Adesina, and then in partnership with the CBN through the conventional banks. That really runs. So that tells you that it's always a partnership that normally runs, and those partnerships are largely driven by the federal sector and by the private sector. And then the government will come in partner in terms of giving policy or also being like a guarantor for those agricultural loans to be paid. That, for me, is the best energy. And with that, the best strategy. With that, you can attract investment into that sector. It has been proven all over. Sometimes when you see in government, what you normally see is just a change of nomenclature. When you see the central government is owning part of it, private. The only run government establishment that has been like a cash cow and be steadily run professionally, and with government just be a partner in a very critical sectors, still remain the LNG project where government just received dividend and it's largely driven by the private sector. I think that is what the government should always be thinking about. How can we partner with the private sector to drive growth in critical areas of the economy? Once you put it to the private sector that you just want to be a partner, in a sense that you want to just be a shareholder, they will drive the growth, they will drive the people that they will bring in as staff employed in this organization, then you see that all these things see the light of day. Look at NNPC, gave us bogus results some months ago. Today they are telling us they cannot even pay their vendors. And again, look at the amount of resources that NNPC control in terms of expenditure also on their overhead staff, and look at what they are saying they are owing. Look at, it's just a change of nomenclature that happened in NNPC. You still have the same set of people not trained, and it's largely driven still by the government, because their largest shareholder is the Ministry of Petroleum, the largest shareholder is the Ministry of Finance. So they are the key players there. Until we begin to see where you unboggle this, look at what they are saying now for the Warri and Kaduna refinery. They are now asking for private sector partnership. And that tells you the failure of governance, where governors have been involved in a lot of politics, in putting politics into our economy. What NNPC is planning to do now was what should have been done almost 19 years ago, at that time by President Olusegun Obasanjo. When he was leaving power, he gave it to Blue Belt, a group that was formed by now Aliko Dangote, that had built the largest refinery in the world, and Femi Otedola, they were the one that wanted to drive this, and it was sabotaged because of lack of political will by the Yar'Adua administration. So we begin to look at our economy, we begin to look at structures, we begin to look at policy direction, about how we bring in the private sector to run especially key industrial area of, key economics area that grow our economy, key sectors that grow our economy. Until we begin to do that, we'll continue to have those challenges of policy somersault and not getting the light of day. So I think the best way is let the private sector come in, government, you try to get a share out of it, and let's see how it works.
Okay, so Adetoluoye, I know you are more in the exports value chain development areas, so to speak. I'd like to get your thoughts on this as regards financing, because we know that there are a lot of risks associated with this particular sector, most especially for the players. The issue around mechanization, that we've not seen it come into play, climate change, climate-resistant crops, and all whatnot. And now we are talking about financing. How has it been when it comes to securing finance? Could there be some sort of partnership that could come into play? Is there a way that you and your players within that sector have been able to get funds to continue to run your operations?
Well, yeah, I mean, if you look at the current state of the Nigerian economy, you realize that non-oil export has to significantly play a more important role in how our company, our country generate revenues and forex, all right? And if you look at what we have abundantly in Nigeria and can export on a week-on-week basis continuously, you find out that the agricultural produce, right? The Produce Export Alliance had actually been doing a number of work in trying to sensitize and build capacity for most agri-businesses and exporters to be able to connect to the right markets and network within the space, and also secure finance as well. On that side, I can tell you that it has not been all that rosy. There's usually always a finance mismatch whereby some funds are available, but they are not available in the right way to really spur growth in that sector, and that has been a major challenge. Now, with all that is happening here and with some of these trends, it looks as if exporters and agribusinesses that are export facing will actually struggle in the short term in order to really get the much needed finance that they need. Currently, I can tell that there are a number of our exporters within our communities that have actually stopped producing for export, not because they don't have that capacity or they don't have that standards, but the resource available to support them has not been available. It's largely unavailable. Now, what we are doing in our own organization within our community is that we're trying to connect them with viable finance that can actually help spur growth and actually help the country, and especially that subsector participate in exports and drive foreign exchange into our country.
Okay, Muhtar, so in terms of risk-sharing mechanisms and insurance products, what do you think in terms of design can come into play now? Because we're hoping that the CBN will be probably, bringing in a new set of people to head that particular body. And these are the two critical standpoints of the NISAL. So what would you expect to make it more formidable and make it perform its operations better than it used to be?
Well, Ali said it all. Risks is key. When you are giving in funding, you must also look at the risks involved in it. I think they must get people that will head the board that have the professional skills to run those boards, especially in the area of risk management. And that's why I still think they should partner with the conventional banks, even if some of the farmers won't like that. But if CBN partner with them and then they are giving the loan at a single digit, that could also be a soft landing for the farmers. The farmers would like that. But again, when you look at risks in terms of agricultural product, but it's the value chain that is really the risks involved in it. It's not in the area of production, it's the value chain. How much of these value chains do we really have, because that's where the risk is. You talk about storage facility, you talk about movement, you talk about machineries to convert this product to a finished product that can be exported. I think that is where the risk is in. So will the new board come in, or with the intervention be in the area of providing this value chain structures to help the farmers in those areas? That could be the key, because a situation whereby you give farmers so much money to produce, and after production they don't have storage facilities, because the problem with Nigerian farmers is not in the area of production, it's the area of storage, in the area of the value chain. How will we be able to provide those value chain? How do they get those machineries? Either I heard the Manufacturing Association of Nigeria saying that some of all these machines that are imported because of the high tariff when these machines are brought into the country, that also affect the cost of production, and in turn make this product more costly to the average Nigerian. So what will they be doing in terms of this value? Do we see where the monetary and the physical side comes in and begin to remove tariff or on these machineries that are part of the value chain that drive down production, that make it the price competitive enough internationally, rather than selling at the high? Those are some of the risks that has been involved in the agricultural value chain, agricultural sector, especially through the value chain mechanism. So for me, we must begin to think of, are we going to intervene the same way we have done and get the same result that we've gotten? That it's not helping our economy, whereby you just throw money to the program, throw money to the farmers, or are we going to begin to intervene in terms of creating that value chain, intervening in the area of value chain? Is the CBN will be building storage facilities for the farmers to pay a certain amount? How will they move this product to the port? How is there going to preservation of this product till it's moved? Those are the things that I think they should be looking at.
Yeah, of course. And we know that these challenges will always be there, because according to the National Bureau of Statistics, the agricultural sector just, improved by about 0.18% 2023, the tail end of 2023, looking into 2024. And if these issues around planning, funding, execution of programs are not well thought out and done, then we'll continue to just rabble around these issues. We then want to say thank you to Mukhtar Mohammed, CEO, Share Investment Limited, and Adetoluyi Ayeola, who is the CEO, Produce Export Development Alliance, for talking to us on this. We appreciate your contributions. Thank you.
Thank you.